Everybody, today in this video I'm going to be showing you how I made $470 today trading options on the SPY. I'm going to share with you my thoughts on why I even entered the position in the first place, and then I'm going to go over a few positions that I'm currently in and why I chose to enter those positions. So now we're looking at the SPY. What I saw was that it was almost double topping, if you see here and here. So there was two options. Either it could break out from this previous resistance right here, it could break out and go up, or it could have a failed breakout and go down. So those are the type of setups that I like to look for. I want to see if it's close enough that it could break out, or if it will have a rejection. And right there, it's a high probability of it either going in either direction. But I anticipated a false breakout and a rejection. And we see here that it had a big one. I wasn't expecting it to have this big of a rejection. I thought it would just retrace to maybe 317 area right here. But it went to 315. Now tomorrow when we open up, it could very well go much lower. But regardless, I took my profit, and I'll tell you why I entered the position. So right here, it looked like it was about to almost break above this 320 area, but it didn't quite get there. And I saw this topping tail right here, on this time frame, on this 4-hour time frame. And that's what made me enter the position. I got a really good entry. I got it up here around 321-ish area. I bought my put options about a month out in August, and I bought my options for about $700, and right now I could sell them for around $1,100. Bought one. So you do the difference, and it's about 470 bucks. So anyway, let's go back to this chart. See here. Yeah, so my risk is very defined in this. You'll notice that if it did decide to break above this 320 area right here, if this went above 320 area, I would have cut it. So my risk was very defined. And if it rejected like I thought it would, I mean, it could literally retrace down to 310 area easily within that next week, I would think. Tomorrow it could bounce up to 317 before it goes back down. I'm prepared. But so those are my thoughts on the SPY and why I entered that position. And I have a month to be right on this. Guys, options, they come with expiration dates. So I chose a month out. So I have literally a month to be right. So my next trade that I entered was Facebook. I entered this about last week, and I'll tell you why I entered this. I saw it going up, down, made this big rejection right here, down to 207, went all the way back up, retraced like a V, okay, and then it had a bunch of these false breakouts. You notice right here, had a false breakout. You could have thought to yourself it's going to break out above 240 right here, but it didn't, and it had a rejection. And then right here, another breakout, 241 breakout. It went to 245, broke out nicely, but then it made a huge rejection. So I anticipated, okay, so if it decides to break out right here around 247 area, then I'll probably get out. But since I have an option, I have time to be right. And then I was. That's literally how it goes. Guys, play options. It gives you time. If you had shares right here, you probably would have blown out of your position. Since you have a contract, you have time to be right. Now, I'm anticipating it to go down to around the 230 area, 220 area even. So that should be a good play. My next is AMD. I closed out of this position. Wow, look at this chart. This chart sucks. It's going up, down, up, down, up, down. So I like this. This is what I look for. I initially saw this after when it made this move right here. It went up, and what is it going to do? It's probably going to go back down. And why did I think it's going to go back down? Because look at in the past. Every single time it goes up, it just goes back down. Up, down, up, down, up, down. You know, it keeps on repeating itself. So I anticipated, okay, fine. So it made a big move from $53 up to $57 in one day. And it's naturally going to have retrace down to the midpoint level right here. Right now we see that it literally retraced in just about everything. And that's exactly what I expected. I wanted to exit around the 53 area just because there's a lot of support in this area. That was the game plan. You look at previous history. How did the stock act before? When it goes up big, it just drops back down big. Goes up big, drops back down. Goes up big, drops back down. Plus, it also helped that there was a lot of resistance in this $58 area. So we had a huge rejection. And now, you know, you want to aim it at this middle point. You see $53, it runs in the middle of all of these long bars, long candlesticks. So that's what you kind of want to see when you exit. Where's the middle price? Where's the truest price? So the next stock that I have a position in is Space, SPCE. Now this is the same similar situation as AMD. Stock went up and then it went back down. Every single time it goes up, it typically goes back down. Look, you see, it just goes all the way up to $20, then it goes back down to 17. So I anticipated that it will do the same thing. And when we look at it, broke above 16, 17, broke above right here, 17, went all the way up, and now look at it, it's back down to 17. Now this would be a great exit area, $17, right at this support line. Anything right here would be a great exit. So that's literally, it's that easy. I'm looking for stocks that are overextended or underextended, and I'm literally playing that stock. If it's overextended, I'm buying puts, which means you make money when the stock goes down. When it's underextended, right here at this point, you know, this would be a great area to buy calls because it's at previous support right here. It's most likely going to go back up because whenever it does go back down, it essentially goes back up in a very short period of time. So you could have made a lot of money on these calls right here. So when the stock is underextended, you buy calls. When it's overextended, you buy puts. Calls means you make money when the stock goes up. All of my previous positions that I spoke with you about today, I made money when the stock goes down. I bought puts, which is a contract, a derivative. Each contract is 100 shares. So I was trading very small position sizes on all of these positions. My SPY position, I only had one contract. I bought it today around 321 price area, and I made $470 in one day off one contract. Now, if you had 10 contracts, I would have made double that, quadruple that. I would have made a lot of money. So that's really what I wanted to go over. Let me know if you guys have any questions. Please follow, like, subscribe if this helped you. And comment down below if you want to see anything else. If you want to know how options work, if you have any questions at all, let me know. I can make more videos. And thanks a lot, guys.